Hello everyone, newborn investor here and welcome to another video. Today we are going to look at Palantir Technologies and the reasons why I'm buying it. So if you're interested, make sure to stick around as we're starting right now. Data has become one of the most critical resources that can make or break businesses and even countries. Founded in 2003, Palantir Technologies took off by building software applications and platforms for the intelligence community to help counter terrorism. Palantir's platform helps customers to identify patterns in data which can be later used in decision making. There are a plethora of data analytic firms in the US and abroad, but what makes Palantir stand out? We will get to it in a minute, but before that, if you like the video and find it valuable, please make sure to hit the like and subscribe button. Your humble gesture keeps me awake at night and motivates me to put in the long hours for making these videos. Alright, let's move on. Palantir provides products that addresses the complete client experience from front-end to back-end systems. This makes Palantir's data analytics platform distinct and makes it a one-stop shop for all analytics a business would ever require. Lately, Palantir has stepped into a more modular approach that would enable the company to sell their offerings separately, which can help them win small-sized to mid-sized customers. This can fuel further growth and eventually lead the company to profitability. Palantir offers two core platforms, Gotham and Foundry. Gotham was Palantir's first platform and was mainly built for government operatives in defense and intelligence. Foundry, on the other, is largely focused on commercial customers. Both Foundry and Gotham helps customers identify patterns within massive data volumes and assist in better decision making. Palantir's customers fall under two categories: government customers and commercial customers. The company generated a total of $51.9 million in revenue from the US Army from 2008 through 2018, and from 2018 to 2020, revenue had grown up to $134 million. Although Palantir has worked with other numerous government agencies such as CDC and NIH, the majority of Palantir's revenue in the government sector still comes from the US Army account. This is concerning as it's never good for a company to be heavily dependent on one customer for its revenue. However, Palantir is already making moves to better diversify their revenues in the government sector, and I hope their plans come to fruition soon. Palantir has a great pipeline, and as of the second quarter of 2020, the company has government contracts totaling $2.6 billion, which to me provides predictability into future revenues. Palantir's Foundry platform, launched in 2016, is exclusively for commercial customers. Palantir is still in its early stages in the commercial segment, and its growth is heavily dependent on leveraging more Salesforce and broadening use cases of its Foundry platform. For the last 9 months of 2020, average revenue per customer was around $5.8 million, and I see tremendous growth prospects in the commercial space with more customers signing up. Palantir reported their fourth quarter earnings recently, and I think it was okay. Not to mention there were some grey areas as well, but if you look at the bigger picture, the prospects outweigh the risks. Let's start off with the risks. When you look at the numbers, the company generated a $1.1 billion in revenue for 2020, which is up 47% year over year. Revenue per customer for 2020 came to $7.9 million, which is up another 41% from 2019. Its top 20 customers generated $33.2 million each on average in 2020. In the fourth quarter, the company closed 21 deals worth at least $5 million in total contract value, including 12 worth at least $10 million, and the company also expects to earn $4 billion in revenue by 2025. The company has been able to demonstrate strong revenue growth in the past, and the management is projecting to grow revenue at 45% for the first quarter of 2021. However, the forecasted revenue growth for the next 5 years is decelerating and is expected to be at a compounded annual growth rate of 30%. For a growing company, that is not what you want to see. On top of that, in the earnings call, the management did not provide any forward-looking guidance on how they can get to a 30% compounded growth rate. Do the investors who bet their hard-earned money deserve more transparency? I'll let you think for yourself. Next, the company reported a net loss of $156.6 million or 8 cents per share against Wall Street expectations. This loss can be attributed to the hefty stock-based compensation expense of $241 million and around $19 million in related employer payroll taxes. This is expected for a growing company, and I personally think it's good for the company in the long run as it enables them to hold and retain great talents. But what troubles me is Palantir's lack of forward guidance on such an expense. Should investors expect a lower stock compensation in the next quarter, or would it be a much higher? Having no visibility of such an expense into the future makes it impossible to predict future profitability. Now that out of the way, let's look at some positives. The company's commercial and government business has seen year-over-year growth, with revenue from government contracts leading the race. As the company makes more headway into the commercial market, the revenue growth should improve or at least stay intact. Additionally, revenue guidance for the first quarter of fiscal year 21 is at 45%, which is 5% more than Q4 of fiscal year 2020. This tells me not to worry about the growth rate, at least for the short term. The company also plans to add more people to its sales team. This to me means more sales and more revenue. Lastly, Palantir recently changed the way it charges its customer. In the previous model, customers had to pay huge amounts upfront as part of the contract. This is okay for government customers as they have deep pockets to make these payments upfront. But that's not the case with commercial customers. With the new model, customers would be billed at recurring intervals, and I think this new model will reduce much friction and would allow Palantir to close more deals. So what's my take on Palantir? There is no doubt that Palantir is currently trading at a very high valuation. In spite of that, institutional investors had been actively buying Palantir. As of December 2020, 335 institutions have increased their position in Palantir as opposed to only 63 that trend their holdings. A few weeks back, Cathy Wood of ARK Invest has added over 2.6 million shares of Palantir, making it one of her top holdings. As of releasing this video, the stock is down by over 40% from its all-time highs, and shares are currently trading at 30.6 times sales estimates for 2021. Comparing it with industry average, high-growth software companies are currently trading at an average of 18 times 2021 sales estimates. So if you compare Palantir with industry average, it is trading at a significant premium. However, the growth rate of Palantir is significantly higher than the industry average, and this can justify the higher valuation. But also note that Palantir's revenue is not diversified as its peers. Additionally, the lockup period has expired recently, so the stock is expected to have more downside as insiders exit. That being said, I think there isn't anything fundamentally wrong with Palantir. I expect Palantir to be profitable in the span of 3 to 5 years, and the stock may touch $50 or higher. I'm looking to buy Palantir below $20, and I will be looking to add on any dips. This in no way is a buy recommendation, so please do your due diligence before investing. Now, I would love to hear from you guys. What do you think about Palantir and its prospects? Leave a comment below with your answer and I'll be sure to follow up with you. Also, if you liked this video and found it valuable, please make sure to hit the like and subscribe button. I really appreciate your support. So until you hear from me again, stay safe and thanks for watching. Bye.